Okay, so this is the third time that I'm making this video, so I'm gonna make this one quick. I've ran through maybe 3 hours of creating this video twice. The first time I created it and I forgot that I was sharing my screen. I was sharing a screenshot that I wanted to share with you guys. And I forgot to move it back to Google Chrome. The second video I was I realized that it was on my mic was on mute. I have this button right here and it allows me to change from unmute to mute. So the first video was terrible. Like it was both muted and I forgot to shift from um screenshot to back to Google Chrome. The second video was decent, but and I shifted back from the screenshot to Google Chrome, but the mute button was on the whole entire time. So I'm gonna make this one short. Not gonna be Probably not gonna be as long as the other ones, but it'll still contain a good amount of value. So don't think that I'm not gonna give you guys value. Just because it's a short video. So just don't let this go over your heads. Um, like I always do, or like I normally do, I'm gonna share with you guys some quotes. Um, Two or three. Ed Seykota, Market Wizards. He was asked, "What are the trading rules you live by?" He says A, B, C, D, and E. A being cut losses, B being ride winners, C being keep bets small, D being follow the rules without question, and E being know when to break the rules. I think for A, cutting losses short, obviously that's important. You don't want to be someone that doesn't even use stop losses, for example. I'm sure we've all been there before where we entered a trade and we just couldn't fathom being in drawdown and closing out in red, and we just allowed the market to take all of our profits and wipe us all out. B is riding winners. So when the market shows you that you're right about the directional bias that you think the market is going in after you've entered the market and you continue to profit, I mean, if the market keeps, let's say you're in a buyer and the market keeps on creating higher highs and higher highs and higher highs and higher lows and higher lows and higher highs and higher lows and higher highs, then maybe you want to set, a trailing stop loss instead of uh ejecting yourself out of the markets. Maybe that's a good idea. Maybe that's a better idea rather than saying, "Hey, I'm just gonna take profit just because price made a higher high," right? Or uh hit my high, right? Market made a higher high or, something like that. But or hit my area of interest. But um, so allowing the market to tell you when the market is now ready to reverse instead of, just coming out of the market just because it hit your take profit. Keeping bets small is going to be C. So this just lets you know that he was interested in having a system where he included A, he included B, so cutting losses short, riding winners. C, keeping bets small. So a lot of the people that I've been reading on have been risking less than 5%. And I think when you have enough emotional regulation, emotional self-control, keeping your bets small, using proper risk management just in case the market goes against your directional bias, um, and in case you have to jump in the market a numerous amount of times, because of whatever things you might mentally be going through. I think risking less than 5% is a good idea. I think it is a good idea. So I've implemented these things into my system and it's been helpful. And it shows in my P&L. And D would be follow the rules without question. So I would follow A, B, C without question. So that pretty much, is pretty straightforward. E is gonna be, it's not that straightforward, I would be honest, but it's know when to break the rules. So knowing when to break the rules would be, you see the market maybe significantly dropping towards your stop loss, like straight bleeding into your, almost hitting your stop loss. A lot of times we know when that's gonna happen just by the volume that you can just see in the candle. Um, and especially maybe if it's NFP, FOMC, CPI, one of these red folder news days or specific times. So knowing when to break the rules, maybe knowing when to break the rules could even mean that you on Monday have a directional bias of being bullish, but on Tuesday or Wednesday, um, you find that your directional bias has changed completely from thinking that the market's going to be bullish to now thinking that it's going to be bearish, but you're already in a bullish trade opportunity, right? So ejecting yourself out of the markets and maybe breaking even or cutting losses short instead of um, staying inside of a trade that you are 90% sure about the market going in the complete opposite direction from a high time frame standpoint. That could make sense to break your rules and come out of the markets. You don't want to make it a habit to come out of the markets, but if it makes sense to come out of the markets, then that would be a reason for you to break the rules. And so that will be considered E, knowing when to break your rules. Um, Ed Sekoda's asked, are you a self-taught trader or did another trader teach you worthwhile lessons? He responds saying, I am a self-taught trader who is continually studying both myself and other traders. So being open-minded to hearing what people say, like successful, uh, maybe potential successful traders on podcasts, or even prop firm, CEOs, hearing what they have to say about maybe even the average of profitable traders that, are managing their money or, their services. Um, because even if somebody is not, doesn't show their profit and loss statement, so you don't genuinely know if they're a profitable trader or not, even if there's someone like that, I still think that you can learn from everyone because I think everyone does genuinely have something important to say, whether they are someone who's successful or not, despite you know what they may portray themselves as compared to who they truly are. Because especially in this industry, not everyone who appears to be successful is actually successful. Um, so he says again, I am a self-taught trader who is continually studying both myself and other traders. So, I think I already told you about, I think what I just gave you guys, but it answers the beginning of this, which is I'm a self-taught trader who's continually studying both myself and other traders. Actually, this speaks about what I just gave you guys, speaks about other traders, so studying other traders. When he says trader, so self-taught trader who is continually studying both myself, to answer the beginning of this, uh, I would say studying myself would be something like my trading journal. So, in reference to my trading journal, I look at my win rate, I look at how many trades I've taken for the week, because as you guys know, if you guys have been following, if you look back on my videos that was taking maybe November last year, December into, 2025, early, this year, January, February, March, you're gonna see that there's been times where I traded maybe 50 or even 60 times, excuse me, or almost 60 times, definitely in that range per week. And that's unhealthy to trade that many times, I think, in my opinion. I think that that's unhealthy. Obviously, depending on what type of trader you are, but in the way that I think, as a trader, to be successful in the way that I trade, I think it's unhealthy for me to, trade and place trades over 50 times. Honestly, over 15 times I think is definitely a drag. Um, but yeah, I think studying yourself, knowing when you start getting uncomfortable. For example, I got uncomfortable when I seen the market. Where am I sharing my screen, or did I share my screen? I don't think I shared my screen yet. Yeah, I don't think I shared my screen yet, but I'm gonna start sharing my screen. You're gonna see that I got in at an order limit, using an order limit to get me in the markets. Market shoots up, maybe I don't remember what the risk to reward was, but was definitely in profit, probably over 1 to 2. Um, then it shoots back down to almost around my entry point. And in the past, from me studying my mental framework, I've seen that in the past I would be intimidated by the market, pushing down to almost like my entry point, or even past my entry point back into drawdown after being in profit so much. But for me, having an idea of where the market's going, having faith in that, or um, and accepting the risk, saying, hey, I mean, I risked 3% on this, and I could potentially gain 9% or more, or I can be out 3%. But I accepted the risk, so regardless of the fact is that, if the market decides to turn on me, then fine. At least I put everything on the table, or at least I ended off the week with everything on the table, right? Instead of running away from the markets. But yeah, so that's something that I want to share with you guys. I'll move from the book. Now I'm gonna start sharing my screen, and here is my most successful trade from this week. It's this S&P 500 trade. In this S&P 500 trade, you can see that I have I mean, balance around 872, equities around 941, because I'm in profit about $69 on this US S&P 500 buy. Um and then you guys can see where I got in for this buy at, which is going to be in this screenshot here. So as you can see, hopefully you guys can see my mouse here, but as you can see, I got in right here. So there was an order limit that I set around 60 or 6,622, mainly for the fact that price had came at this area quite a good amount of times, and lower time frame indicated that there was an imbalance where, it was just wasn't a sufficient amount of sellers in that area. There was a good amount of buyers, but not a good amount of sellers. So inefficiency in the market, price comes, mitigates, and pushes up. I figured that would happen clearly, so that's why I had a buy order limit set here, and I had a stop loss below here. Price market pushes up, drops down. This is the example I just gave you guys in the analogy of, you know, you anticipate, let's say, for example, you anticipate market going up, you get in here, price pushes up, your stop loss is still below here, price comes down, almost comes back to your entry point, um, pulls back right here though instead, and then creates, a high. So, um, this market when market pushed down here close to my entry point, again, this is where I felt intimidated, inti not as intimidated as I used to feel, but when you have it pre-framed in your mental, infrastructure, it allows you to be more mentally and emotionally prepared so that you know what to expect, and it gives you more of a reason to accept the risk so that you continue to work on your mental framework, so that you do not build bad habits. The least thing that you want to do is uh create continue to create bad habits. The habits that, make you a successful trader is accepting risk when it makes sense. Only times that it doesn't make sense to 100% accept risk is when you feel that the market is in fact going going to go in or against your directional bias that you know, you already, anticipated and are active in a trade, if that makes sense. So instead of feeling like, oh, it's too late for me to, come out of this trade that I think is gonna actually go against me, I'm just gonna let it hit my stop loss. Well, you can actually pull out and eject yourself from this trade idea, um, because, it hasn't hit your stop loss yet. So it's actually not the end of the world. You can still remove yourself from this trade idea if you feel like, you got the wrong bias. So moving on, I'm going to start showing you guys trading view. So trading view is, see, see if I can share trading view. Okay. And oh, all right. Here's a futures contract for S&P 500. If you guys have watched my other videos, you guys would know why I'm looking at futures contracts now instead of looking through like Oanda and the other, other ones. But also, if you guys have not already joined my free Discord, take advantage. It's free right now. I'm providing with you guys with a good amount of value. It's taken me 6 years to learn these types of stuff. So free Discord link is in the description. And like, comment, subscribe if you guys have not already. Back into the video. So as you can see, weekly time frame is clearly bullish. Daily time frame is clearly bullish. 4 hour time frame, clearly bullish. 1 hour time frame, clearly bullish. So what I did was I saw that, we got some, a new high here. So uh this would be a higher high, higher low, higher high, pullback. Price never closed beneath here to consider that we were ultimately bearish. Price actually creates reasons on lower time frame to consider that we're going to be pushing high. Let's say we drop down to 5 minute time frame. We can see that we had a big push in this area right here, right? So we were starting to downtrend bearish, but then the trend switched from bearish to bullish. Then we started ranging. So I did unfortunately get in around here, which is the pullback, but the risk to reward didn't really make sense. It looked something like this. With that being said, price started ranging for about 15 plus hours. On this pullback, you can see ranging, for about 15 hours. I thought it was a good idea for me to set a order limit instead once I had, removed myself to look for a better price. And I scaled down to lower time frames. So if you look at like a 2 minute time frame or maybe a 1 minute time frame, you can see that there's imbalances below the ranges, these ranges right here. I would consider this ranging market. You can see prices ping-ponging within the 5 minute bullish range. So once price dropped down to this level here below the uh below the range, you can see maybe one time, two times, three times, four times. This is clearly an important level. One, it's an important level. Two, lower time frame shows that it's a zone that has imbalances in the market. So inefficient price or inefficient um selling too much buyers in the market, not enough sellers in the market. So price or the market, I think, would push into that area. That's why I set my order limit here, my buy order limit here. And I use my stop loss below this area right here, and then or low right here. And then I don't have a take profit, which is why I'm still in the market. But if you look back into the screenshot, you can reverse and go back to where I showed you guys a screenshot of me in the market in this trade on S&P 500. You'll see that I moved my stop loss now, so my stop loss is in profit. I'm using what's considered a trailing stop loss, so in case the market were to reverse, um, at least I know that I'm protected and I can't lose. It's pretty much a win-win for me. Um, because unless I unless the market were to, what is it called? I said it on my most recent video. Um, I forgot. I might think about it later. I mean it's 3 a.m. on a Sunday, so I'm blanking right now. And I did two videos before this, but I can't upload it because I messed up on both of them. So you can imagine how I feel right now. Um, yeah, so yeah, market allowed me to, it activated me in around 3 o'clock, which is London session, as I expected for market to, come to this area. It's also around EMA, so I mean it felt like a good enough reason for the market to tap me in, which it did. Now, so activated, market pushed down, scared a lot of people out probably, and pushed back up. So I'm gonna hold this trade. I don't really think that the market would create, or reverse around this area, but I'm hoping that, price will continue to go up, and I'm gonna continue to use my trailing stop loss, until price reverses. But, um, next, NQ. So Nasdaq. This is obviously everything from probably the monthly to even the 1 hour time frame is bullish. So I don't expect anything other than a pullback into this area so that we can start looking for price to create higher highs. Um, if you guys haven't realized, blue is gonna be what I would flag as I have an open position. If it's light blue, that means that I'm thinking about opening a position. And I chose that because, there's two colors that I can call blue or different shades of blue. There's no other color that I can technically use as the same color but a different shade. So I try to do everything as easy as I can, just so that you guys are aware. But so daily time frame with USD JPY, since this is a futures contract with USD JPY, it's actually the inverse. So if we're looking for sells on the USD JPY contract, a futures contract, it's actually going to be bullish signals on USD JPY for the Forex currency. But I do think that USD is taking charge from what I looked at on the DXY, which tracks the US dollar. Um, so being that the US dollar seems like it's making, a higher high, that would help us understand that we're probably going to make a higher high on USD JPY. And if we look at USD JPY, there's been a 4 hour market structure shift. So I'm anticipating a pullback into this 4 hour area of interest. Um, yeah, I mean, I'm considering this as a 4 hour area of interest, and either here or here, and to create a lower low. Next, NZD USD. I think that the US dollar is going to be bullish, but I mean, bullish enough to out out challenge the New Zealand dollar. So daily time frame, it does indicate bearish momentum. We're also under the daily EMA. And then 4 hour is indicating that we're bearish. So as you can see, market was previously bullish. So bullish momentum here, 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 here. This would be a leg. Then around this zone, I would anticipate looking for sells to short the market and create a newer daily low. We've already shifted from the 4 hour time frame to going bearish. We just want to make sure that we can get a pullback for an entry. That's just what I'm personally looking for. Until then, I'm not trading this market. AUD USD, uh, it definitely pairs that for AUD USD, Euro USD, and GBP USD. Daily time frames bullish on all of them. It's just a matter of looking for which one presents the best risk to reward. So each of them have a solid 4 hour or daily area of interest or key level. As you can see, if I scale down to the 4 hour time frame, there's been one, maybe two, possibly three, four. You can even go back down to here, maybe five, uh, rejected or supported, um, 4 hour key levels. All right. I might call these things key levels instead of zones. I will change that. I'm gonna call this key levels. I don't like using the word zone and AOI, and it just doesn't fit. It doesn't seem right for me. Um, so key levels. All right, so we got the 4 hour key level. Euro USD. Again, I put zone, but I'm gonna change it to 4 hour key level. I don't, I must have changed it before I can click it. Switch back to 4 hour. Boom, we got 4 hour key level hit a couple times. Once it was hit a couple times, I just felt like I considered it to be a good area of interest. And we're also bullish on the daily time frame for Euro USD. Plus, we're above the daily EMA. So it could just be a retracement to push to the upside or further than this high, right? Next or last, we got GBP USD. Shows the same opportunity for Euro USD for me. And I think that we're either using the daily or 4 hour uh key level. So I'm gonna change this to 4 hour key level, and then I'm gonna change this to daily key level. Um, yeah, so I'm looking for the market to come down to this key level, and so that we can see if we get a reason to push price into the bullish side, creating a newer high. So that's something that I'm considering for this upcoming week. I Let me know if you guys have any questions. Again, join my free Discord while it's free right now. I share a lot of value. I read every single week, and the information that I read and invest into myself. I do spread into my trading Discord on YouTube. So support the channel if you guys haven't already. Subscribe. Also, like and comment. And I hope you guys enjoyed this video. I hope you guys enjoy your week and good luck to you on your trading journey. I will see you guys in the next trading video.